Hi, my name is Swapnil Karkare, a chartered accountant and an economist, and here's your monthly economics and finance wrap for June 2025. I'm recording this on 28th June, and here's what has happened till date in this month. We saw so many things this month changing the course of global markets, economics, and geopolitics due to Iran and Israel conflict that lasted for a few days but had a lot of impact. And there was also some news about trade deals, rare earths, and much more. Volatility was down in June. The markets that dipped in June included US small caps, Pakistan, Indonesia, Switzerland, Mexico, Spain, France, a mix of countries, not all developed and not all developing countries. On the other hand, Korean markets, KOSPI, saw 15% gain in June. This was followed by Nasdaq by 8% and Japan, US other stocks, Taiwan, Hong Kong, Canada, and Russia more tilted towards Asian markets and US. KOSPI's rise has been powered not by earnings but by expectations, with the expectations that the new administration led by President Lee would help erase the so-called Korean discount. Now coming to Indian markets, Nifty 50 was up 3 to 4% in this month, a great market ride for Indian markets too. Telecom sector delivered highest gains due to stocks like Sterlite, MTNL and Bharti Hexacom leading the charts, and most companies within that sector also did well. Almost all sectors in India posted positive growth in the month of June except for FMCG. Now coming to bond markets. In the month of June, Switzerland and Indian 10-year government bond yields rose more than 10 basis points. In the first half of June, Indian bond yields hardened as RBI changed its stance from accommodative to neutral. The yields were up because that signaled a pause in further rate hikes and further monetary easing. Then banks started booking profits as CRR rate cut meant that there will be lesser need for further liquidity enhancement tools like OMOs in future, and that's why banks started booking profit and bond yields rose. Then in the second half, the Iran-Israel conflict and a VRRR auction to suck up the excess liquidity firmed up the bond yields again. Countries like Russia, Turkey, South Africa, Mexico, UK, Brazil, etc. saw their yields go down. For commodities, this month was a bit different. Russian crude oil, which is called Urals, it posted 10% gains, while Brent crude posted only 5% gains. Russian Urals even touched $75 per barrel due to Middle Eastern conflict. At the same time, uranium prices rose by 10%. This was due to additional uranium purchases, and a demand for nuclear power rose along with obviously the Middle East crisis. Platinum prices were also up by 25%. Last month they were up by 10%, now 25%. Platinum is on a big rally. Well, that's your monthly finance wrap. Now the top stories. Oh, the American dream is shattering faster than ever. The one thing you could trust in the entire world of economics and finance in the modern world was the US government data. Man, if you have seen the coverage and you have seen the quality of US government data, you would know what I mean. Because American statistical data may not be accurate anymore, thanks to budget cuts by Trump and Elon Musk. They imposed a hiring freeze in January this year. It impacted the budget of Bureau of Labor Statistics, which is BLS, that compiles all the economic data. Due to staff shortages, BLS had to rely more on imputation, which is basically making educated guesses instead of actually going and surveying, or instead of actually going and calculating certain things. This introduces higher sampling error, making the data less reliable. For example, BLS stopped collecting price data in some provinces in Nebraska, Utah, and New York. Not just that, it had to suspend hundreds of wholesale price series data in May. It also applied incorrect sampling weights in April's unemployment data. And again, an important thing, Trump's administration disbanded external expert advisory panel And guess what they did? They checked the quality of data. So it is painful to see degradation of such beautiful, high quality statistical system in the world. And unfortunately, that has been a trend since few years across the world, and now it's in the US too. Now, the next story. India's ride hailing industry is in crisis, and it is affecting millions of commuters across the country every day. In Bangalore, bike taxis, the cheapest way to beat the traffic, were completely banned in June. 75,000 riders lost their jobs overnight, and the result was traffic congestion going up by 20%. In Mumbai and Delhi, apps like Uber and Rapido are now asking us to pay extra tips before they start riding. And if you are not guaranteeing them any tip, then obviously there will be no ride further. In Karnataka, government found apps charging 100 rupees a kilometer when the legal rate was 15 rupees a kilometer. That's over 6 times. And anywhere in India, you have the same story going on. Longer waiting times, frequent cancellations, surge pricing, many other problems. And that is leading to problems in us going from one place to another. But here's a crazy part. Uber's president admits that there is shortage of cars in India. Unlike countries like US or UK where anyone who has car can become an Uber driver, India requires commercial licenses. This creates a massive bottleneck. You need yellow number plates, commercial registrations, permits, so on and so forth, which costs lakhs of rupees. Most people can't afford to do this, and so the supply remains artificially lower, and that creates the fundamental problem. Meanwhile, the platform has been taking 20 to 30% commissions from every ride, leaving drivers struggling to meet their own needs. The math, I think it's not working anymore. But there are some interesting alternatives which are emerging, and there are three main approaches which others are trying to solve. First is the union made app. Yatri Mitra, which is launching in July, is backed by auto rickshaw unions in Mumbai. Instead of heavy commissions, they just pay 25 rupees a day. They keep 100% of earnings and get accident insurance too. Model number 2 is open source revolution. Namma Yatri started in Bangalore with zero commissions and open source code. It's community owned, transparent, and has even forced Uber to reduce their commissions for auto and bikes. Model number 3, flat fees. Even Ola has switched to flat 67 rupees daily fee instead of commissions. So how do we analyze this? First of all, we understood that there is a fundamental shortage in India. Secondly, whatever the system is, I feel that there has to be a free market in it. If the Uber and Ola are having surge pricing, you have to open up the surge pricing mechanism, because that's how the demand and supply matches, and that creates better opportunities for most of us. Even if we feel that okay, there is a problem, in reality it will be helpful, because if we keep a cap on certain routes or certain areas, then there obviously will be more and more shortages. Now, what does this mean for you as a passenger? Well, if these new models succeed, you could see lower fares, shorter wait times, and no more tip to get ride. But one problem in the entire thing is that states have different laws. So what works in Mumbai may not work in Bangalore, and what works in Delhi may not work in Chennai. The ride hailing revolution isn't over. It is in a transition, and hopefully it will reach some better conclusion and better commute for all of us. Now the next two. So there is some big news from Maharashtra. Torrent Power is now allowed to distribute electricity in Nagpur alongside the existing MSEDCL, which is Maharashtra State Electricity Board. Yep, two companies will now supply electricity to the same city. Sounds good, right? Yeah, usually competition improves, everything. I have been a proponent of competition, increasing competition for a very long time. Maharashtra, however, isn't stopping at one destination. Cities like Mumbai, Thane, Pune, Bhiwandi, Nagpur, areas like Vasai, Virar, Kalyan, Dombivli, Ulhasnagar, all of these places may soon have multiple electricity providers. But here's the thing. Does this kind of competition actually be healthy or helpful? Or could it mess things up? Let's break down the electricity sector. There are three main stages: generation, distribution, and retail supply. Generation is basically how do you generate the electricity: solar, hydro power, coal power plants, all these things, which the companies managing are called GenCos. In distribution, the companies are called DISCOMs, which carries power from one area to another through the help of wires. And third is the retail supply, which is basically how it reaches your home or office. That's it. Now, most people don't realize that distribution is not a normal business. It is a network business like roads and railways, because the main component is wires. So from one place to another, fitting a wire and transmitting the electricity from one place to another requires very high level capital expenditure infrastructure. And because it is a network business, for example, Indian Railways, do we have parallel tracks, one for Indian Railway and one for a private railway? No. Even if tomorrow government allows a privatization in the railways, what they will do is probably ask the private people to run the train instead of tracks. Otherwise, it's unnecessary for one place to another. Already we have shortage of land and everything. Why would someone lay another set of tracks just to travel from one place to another? You can't have 5 different companies laying 5 different set of wires and generators on the same road. It is not practical. But Maharashtra is doing that. Let's see what it is doing. Torrent Power will now lay its own set of wires in Nagpur, even though MSEDCL already has a few set of wires all over the places. So now there will be 2 companies with 2 different set of wires, poles, transformers, everything. Here's another issue. Private players usually go after big commercial and industrial areas because they are high paying customers. They don't rush to villages, agricultural areas, or residential areas because they are low paying customers. Now assume that torrent power goes to industrial areas. What will happen to residential areas? They will be served by MSEDCL. Now MSEDCL or any other power company usually charges higher tariffs for industrial and commercial complexes and areas, and lower charges for the residential and agricultural areas. The money earned from industries and offices help cover the cost of supplying cheap or free electricity to farmers and poor households. That is called cross subsidy. But if private companies take away high paying consumers from MSEDCL, now MSEDCL will be stuck with all the low paying ones. Less money will be coming in for MSEDCL, and that will make it more problematic financially. There will be more debt, there will be more losses, and probably you might be impacted because now MSEDCL will raise their own tariffs on residential areas. In many developed countries, this is not how they manage things. One company owns wires and maintains the infrastructure because it is unnecessary expenditure to duplicate the same set of wires and infrastructure, right? But many companies can supply power using the same set of wires. So for example, company A, company B, and company C. All 3 companies operate at the same time, same level, same area, but they are using the same wires. No separate set of wires. And now consumer can choose, I want company A, B, or C. This is what the usual model which is being followed everywhere. In India, we haven't fully separated these roles. The law, which is the Electricity Act 2003, talks about generation, distribution, and supply as separate entities, but these are just on paper. Practically, things are not followed at all. Thus, parallel licensing which is taking place in Maharashtra is legal, but it does not include provisions which help keep wires business and retail supply business separate. Mumbai is a bit of an exception. It has multiple electricity providers like Adani, Tata Power, BEST, and MSEDCL. And it kind of works for a specific reason, which are high population density, good infrastructure, no free power to farmers because no agricultural area, people can slightly afford higher prices than rest of the country, and private players have been there for many years. So parallel licensing in Mumbai has survived, and it's not perfect. There are many problems in that too. So what should we really do about all these things? If we really want better services and lower prices, here's the better approach. First, keep one company managing the wires so there will be no duplication of infrastructure. Second, let multiple companies supply the power to consumers directly using the same set of wires. Third, make sure private players serves everyone, not just to profitable consumers. There has to be some kind of legal arrangement in that. Fourth, push for competition in a wholesale market, like allowing discoms to buy from different energy generators through open bidding. This is cleaner, cheaper, and smarter than having two sets of wires running across every street. We can't treat electricity like selling SIM cards. If we don't like one provider, there will be another provider. No. This is different, and we have to be careful about it. State boards like MSEDCL might even collapse.
That's all, folks. Do support this channel. If you have learned something new today, then like it. If you think that this information will be useful for someone else, then do share this video with others. And yes, don't forget to subscribe to the channel. Thank you. Goodbye.